Hello everybody, it's me the Boss Hog, and this is my stock portfolio review as of the end of August 2021, which currently stands at a little under 85,000. Let's do it. Alright, so a much better month. Last month I was a bit sad because it was the first month where I lost money. This month, basically record breaking from many perspectives. It's all-time highs, the best profit, the best dividend. Had a pretty good month, honestly. I think I almost made the right calls consistently. Made one or two mistakes, I think, but broadly speaking, super happy with the direction of the month. Especially because I think a lot of my contrarian plays really came good during the month. My UK mining stocks did really well, with maybe the exception of my gold hedge, but I was building that during the month. Almost all of my American shares did fantastic, but especially my bigger shares and riskier shares as well. So that was really good. I picked up a lot of mining shares during the month, but my real big wins were probably Evraz and Anto. Evraz is an iron ore player, which I did a special video on, comparing it against Rio Tinto and why I think it's better. And Antofagasta is primarily a copper miner, and I just think I got a really great entry for it, like 1370. So really pleased with a lot of things and timings and etc. Definitely not a perfect month though. I've got a couple of bags I'm holding on UK recovery stocks especially, so actually I lost some ground compared to the FTSE index, as you'll see in a minute. But like I say, broadly speaking, happy. I have been averaging down on those mentioned shares there. And also my dividends this month are a bit better than I was expecting. I was expecting sort of just shy of 200, but I'd completely forgotten about a National Grid dividend for about 60 quid. Sometimes UK dividends can take a couple of months to come through. Normally they just get paid twice a year, so there's like less of a rush to get them through for quarters. I sold National Grid immediately after it went ex-div. I was happy with it. I thought it was fully priced, and it just slipped my mind that it was there. So that was a nice surprise, and yeah, record-breaking divvy month as a result of that. Index-wise, so I closed the gap on the S&P comparison. The S&P I made more mistakes on very early in my investing journey, which started December last year. So I've gradually been reeling that back in. Lost some ground the last month, but made it back up this month, so that's looking pretty good. But I did definitely lose some ground against the FTSE All Share. Primarily, I think I'm a bit light in the FTSE 250, which has been doing really well. It's like smashing it this year at all-time highs and etc. But like I said, broadly speaking, I'm super happy this month. I sort of choosing to look on the good side and actually feeling really confident. So yeah, so at a high level here, it's as you can see on the screen at the moment. Any questions, let me know. I would also say as well, if you look in the middle right there, my buy and sell, my trading was quite high this month, or like returned to relatively high levels. That was just because I was selling a lot of stuff to average down and seize on some opportunities, and actually almost exclusively, maybe with one exception, I was happy with the decisions that I made. So we'll highlight those in just a second as well. But yeah, happy. So okay, let's have a look at a few more details. Go from there. All right, so if we have a look at profit over time, did finish at all-time highs. You can see there are a few dips, and interestingly, for the last 3 months, I've had dreadful 19ths of the month. Not really quite sure what's causing that, but it's pretty interesting to see that happening. A bit weird. You can also see though, actually, my US shares have really started to pull away from my UK shares. I do have a higher exposure to US shares, but only about 57%, so it really doesn't explain that kind of delta. It's really just because my US bets have come good. And are consistently looking better and better, whereas my UK shares haven't yet. I've got a few recovery stocks, and I am generally more heavily weighted in UK stocks to recovery. Things like financials, mining, and consumer discretionary have a real UK bias. So I'm still kind of holding those companies just because I really believe in them, some of them very strongly, and hopefully they'll come good in the future. So yeah, you can see here really solid American position. I mentioned here a few of the more beaten down shares, being National Express is NEX, Fever Tree is Fever. I love both of these companies. I think they're fundamentally misunderstood as recovery stocks. I mean, I can see why we're interpreting them both as that, but yeah, again, I've mentioned details on these beforehand, done a video actually on Fever Tree, and really should do one on National Express as well. Still a very large holding for me, but although I'm hoping that the UK stocks are going to come to life soon, I'm generally happy with the direction of this graph, and it did finish the month all-time high, so that was pretty satisfying as well. So all right, let's have a look at a bit more detail. All right, so overall, 12% return on investment. Pretty happy with that. This is my first year investing, and my target is 8%. So I'm happy from that perspective. I'm trying to outperform the markets, obviously, but so far I haven't been able to do so. I have caught up or catching up the S&P 500. I feel like it's like a race against time, where all throughout the year I've been gradually clawing back. The exception was last month, but again, I kind of made up for it a little bit this month. So I'm kind of happy there. I'm not sure if my UK stocks are going to have a reversal. Still, fingers crossed on that. But yeah, so moving in an improved direction overall, but definitely not keeping up with the markets as it stands. So we'll see. Kind of humbling in a way, to be honest, but that's what this keeping data is for, to be honest with myself. The FX impact, which I do try and buy when the dollar is weak, returned to what it was a couple of months ago, which is 400 and a bit pounds. My break-even price on this is like 1 to 139.2. So yeah, a modest improvement last month, but effectively back to where we were 2 months ago. My worst performer is National Express at the moment. It's been super volatile over the last couple of months. I've actually been adding shares, under about 250. I just still like it. I keep up on the quarterly updates just to make sure. I don't really view it as a recovery stock so much. And it's done a great job of sort of strengthening itself and even acquiring weaker rivals during COVID. So it operates in a lot of markets, but very little of its traffic is kind of transnational. It's all like within local markets. So once things like businesses and schools start going back, it's gonna do really great. And it's renegotiated a lot of its contracts as well to be not based on passenger volume. So its revenue's already recovered, and its earnings are looking increasingly good as well. So I'm happy with it, essentially. And yeah, in terms of my portfolio, which stands currently at 31 companies, so that's the lowest it's been since I started investing. List here of companies that are negative. National Express there. GAN, I've been bag holding this for about 6 months, but actually I'm sort of increasingly confident it's turned a corner in its last updates. This Phoenix here, it did go ex-divvy, which is responsible for a fair chunk of that. However, I do continue to buy it just because I think it's sort of about 10% undervalued at the moment, which is rare for an insurance company in the UK because they usually keep up to date with events. Telecom Plus here, this is a company that I kind of wasn't patient enough getting into, to be honest with you. I think it's a fine value play in the telco sphere where I feel comfortable pricing companies. So I continue to bag hold here because I do think it's 20% or so undervalued. Fevertree I really like, but it had a bit of a pullback on Delta worries basically. But again, my reasons for owning this company are unchanged. Poly here is a gold and silver miner that I've been building my hedge with. It's about 4% of my portfolio at the moment. It's one of 2 main hedges that I have. Again, super happy with that, and it yields about 7% as well, which is awesome. EPD is another one that yields 7%. This is a pipeline company, primarily gas. And then MPW here, this is a very small holding in it, but technically down £6. So that's they're my negatives at the moment, just for full disclosure. All right, so my not too much change on this, frankly. So I'll try and get through it nice and quickly. In terms of level 5, which is the riskiest tier, so level 1 is safest, level 5 is riskiest. I didn't buy a huge amount in this, but actually it saw my percentage of portfolio go up quite a lot just because both of the companies in it had strong months. That's Genie and GAN, which are basically both software IT companies for the gambling sphere. So both of them had very strong months, and that saw a £900 swing on the 2 companies combined. Level 4, which is where I've got riskier companies, but they have like a solid proven company. It's just that they have some challenges around COVID. I did pick up a few shares in some of these, but nothing major. The main acquisition I think here was National Express. Profit actually reduced slightly overall, but yeah, where I've been buying some, it's 11% give or take of my portfolio now. Level 3 showed the biggest improvement in profit, certainly, just because a few of my bigger bets are in that category. And they did really well during the month, so that was pretty awesome. Level 2, I don't actually have any shares in this. These would be like safe companies in theory that have something interesting about them, or they might be impacted in COVID as well, but actually are still fairly safe. The only company I did have in here was like a cargo container shipping company, but I only had a very small stake and decided I didn't really want it. I think I sold it to buy some Fevertree shares, so fair enough. That, by the way, I was also buying Fevertree is also in level 4 at the moment, just whilst it's struggling or having some challenges, I should say, still profitable and everything else. Level one, these are my safe companies. I've really consolidated this down to just 2 companies I like, both in Texas by chance. So that's Vistra and EPD. Yeah, I like them both. Vistra had a pretty good month, and EPD has been recovering during the month to the level where I'm now breaking even on it basically again before divvy. So both Vistra I seem to have timed really well. I'm up about 15% on them, so that's definitely a fair chunk of that profit actually is Vistra. So that feels really good. Yeah, broadly speaking, not a huge change overall. I'm actually going to start focusing on beefing up my core, so level 3, and probably also level 4 as well. I'm really just wanting to invest more heavily, I think, in the recovery stocks, just because I'm fairly bullish on them, generally speaking. Again, maybe slightly contrarian, but there's a good chance for me to average down as well. So we'll see how that shapes up. But I'm happy with this distribution of my risk anyway, so all good. All right, so just to be super clear, this is my performance by sector, and honestly, when I first started investing, I never would have imagined my pie would look like this. I think it looks quite unusual. Part of that is because I have 16% of my portfolio in Huntsman Corporation. I think it's an absolute steal. I just couldn't stop buying it, and I really went hard on it in the $24. I also picked up a considerable amount of Everest shares when it dipped like 10%. I could have been slightly more patient, but I definitely picked up some good. I averaged down really heavily, and now it's already recovered, so that felt good. Polymetal similar. I'm actually red on poly, as you saw not too long ago, but I like that. Sentiment is my other part of my gold hedge there, but I got a great entry for it, so that's still green. And Anto there as well, so you can see my mining slice is also really big this month and almost doubled, I think, in size compared to last month. The falls are in consumer discretionary. Yeah, I sold out of almost all of my Games Workshop to, I think, buy FIFA Tree again, and maybe a few others as well. I also trimmed 20% of my Hollywood Bowl holding. That was just to, again, take advantage of Huntsman Corporation on the dips. So as a result of that, that's some fairly chunky outflow. And I also decided to sell Merck. I like Merck. I was up, a solid amount, but I just prefer BMY, if I'm honest. And I was just consolidating my portfolio and went along those lines. I'm still a bit light on both healthcare and technology. I will be looking to grow those, but I think there's a lot of good opportunities, in my opinion, in the financial sphere, and I'm just a bit heavy. It's not exactly how I looked, but broadly speaking, I think I'm fairly happy with how things are looking currently. Yeah, I think I've already said everything in my notes here. So yeah, I did look at this like mid-month, and I was like, man, this really isn't what I was planning at all. And then when I thought about it, I'm like, do you know what? That's okay. Like things changed. I felt like I picked up some good opportunities. So it's like, okay, so what? Like I wasn't particularly. There's no reason to be, to have 20% in technology or 15% in healthcare, right? If I think there are opportunities elsewhere. So I do gradually expect my defense chunk, especially, to fall back. I'm not planning on selling any Huntsman anytime soon, but I probably won't be picking any more up for the foreseeable future unless it gets ridiculously cheap again. But I do suspect that this pie is relatively atypical from a lot of investors' perspectives. So I guess any questions, or if you think this is mental, feel free to let me know in the comments. But otherwise, let's move on. All right, so in terms of dividends, as I touched on, my best dividend month to date, I will exclude March when I got a £290 special, but broadly speaking, I'm going to consider this my best dividend month to date. I got a reasonable number of dividends, you can see them on the right there, as well as my largest non-special dividend yet, EPD there for 115. Felt really good, honestly. The first 3-figure standard dividend I got, and it's awesome. I'm going to be getting at least that, but actually more than that, because you can see there I added to my holdings every quarter, so that feels really good. In terms of other dividend-related companies I got this month, so Telecom Plus, there I'm buying under 1200. I do appreciate at the moment it's at about 1050. I really think that's cheap. I did spend some time going through the company financials about a month ago just to make sure I wasn't being silly. But I work in a telco. I'm comfortable pricing telcos. I did it even for my last business. So I'm very comfortable with the business model here and the numbers behind it. So like I say, I'm bag holding at the moment, but I feel like this company's at about 20% undervalued, so fine. BMY here I like under 67.50. I think it's again just undervalued at the moment. I think it's good for many years It's got a good pipeline, and it's golden geese is good until I think 2026 before they have to worry about that. So again, they've still got some good value to extract out of that. EPD under 22 as well. I was buying, so that's that's also why I picked up many more shares. But you can see they're gradually increasing my holdings in quite a few of those. JPM, I just had one share, so I sold it. Preferred HBAN is my US financial play, much smaller, I appreciate, but I'm convinced there's some value in there and really love my buy price for HBAN as well. Danaher is the company here I regret selling. I got into Danaher in a medium stake, but it was close to 2% of my portfolio at the time when it was like 250. I sold out about 292, I think, and it's just continued to run up. And to be honest, I sold out of it because it just seemed expensive and it trades on a hefty multiple. But I do think it's a really great company, and that's the kind of company that you should be willing to invest in the future, right? It does something that clearly can deliver value. And I'm sort of revisiting it. I kind of regret it, to be honest with you. I mean, like, not just because it's continued to run up, but I kind of got it on my watch list and might just be like, I think I'm being stubborn, and I think I'm just going to start buying it again when I run out of other things to buy. So yeah, that's definitely my regretted sell. I did also sell almost all of my Apple. So last month I sold half my stake. This month I sold my other half a stake. I think last month it was to buy either Genie and or Hun. And again, it was very similar this month as well. So I'm really confident in that. And I will look to buy Apple shares again. But I sold out of Apple about 148. So here I'm really confident it was the right decision because those other companies have just run up so much more. TGP, no regrets. National Grid, likewise. I think I bought into National Grid about 820, sold it about 960. Happy with that return, and I felt like it was fair valued when I sold out, basically. So no issue there. Yeah, and I'm just looking forward to September, which should be my best month. Not only do I have a lot of quarterly shares that are like in that September quarterly period, but also a lot of UK shares are kind of March/April and then September and October. So I'm kind of expecting those 6-month windows to be extremely good moving forward as well. So I have a couple of UK and US shares coming good next month as well. So that should be awesome. Generally speaking, I really enjoy getting dividends. My blended portfolio yield is just above 4% at the moment. So maybe heavy, but I have a lot of UK companies like mining companies like Everaz, for example, I touched on earlier. When I was buying shares, that was a 12% yield. So you don't need much of that before it weighs on everything. My Phoenix is 7.5%, Poly is 7%. I have a lot of those kind of companies that kind of push everything up. And the UK has some really great dividend yielding companies as well. So that partly explains why I have a 4% blended yield on dividends. But it's awesome receiving them, and definitely one of the most fun parts of investing, generally speaking. All right, so this is almost getting to the stage now where I can talk about specific shares in a bit more detail. You'll see there that I'm down to 31 stocks. I took the axe to several positions, and honestly, I'm kind of considering adding back into some. We'll see. But you can really see here I went super heavy into Huntsman Corporation. When I first started investing, I said I wouldn't have more than 8% in any company, and you can see here I've got 2 companies that are above that. But again, I just think Huntsman is horrifically undervalued. I have a $32 price estimate. I might even nudge it up a little bit. I'm on the lower end. I'm at the lowest of analyst spreads. I've seen as high as 48, which is a bit extreme. But yeah, I've listened to results, read as much as I can, and I'm super confident in the direction here. So I really wanted to bet big. I think it's just really overlooked because it doesn't fit into anything neatly, right? It's not like a large cap. You're not going to see it pop up on too many investment accounts because it's not big enough. It's like a 9 billion, I think, company. When I was buying it was PA was like 8.5. It yields 3%, but it's not really like a dividend growth company, right? Every 3 years they just slap on like a 15% increase in dividend growth. The company also doesn't look good because its revenue is actually decreasing as it moves out of lower margin areas and into higher margin ones. So though its earnings are increasing, if you just have a cursory look, you're like, oh man, revenue's going the wrong direction. I'm just not interested anymore. So I think kind of between it's not a dividend growth stock, it's not a large cap, it's not a small cap. It's a complex business making products I can barely pronounce. I mean, I can't pronounce it, it's like advanced chemistry. But I just think a lot of what it's doing is clearly going to be necessary. And I just really like the way the business is shaping up, right? I'd much rather have a smaller business that was more profitable, and it's gradually moving in that direction as well. They've got a war chest to acquire additional companies as well, and they're also investing in a very advanced facility extension in America as well, which will mean they can produce some nifty new chemistry that no one else in America will be able to produce. So I just see it as like a widening moat that no one else can easily copy, right? Very advanced, kind of foundry-esque level of sophistication in that factory. So that's it, I guess. It's like an industrial I'm excited about. I was on the heavier side of trading this month, but you can see there on the right. So this table basically shows my active holdings. But you can see some of the smaller holdings, I've got massive profit against them because the profit shown here is both realized and unrealized. So you can see here I took a lot of profit off the table for Apple, Microsoft, Games Workshop, and redeployed it. So we'll see if that's the right decision anyway. It's still like all three of those companies, and I will be looking to add back into them, but that was the decision I took. In terms of notable purchases this month, Hun there 7.3k, Evraz 3.1k. I was kind of surprised when I saw that figure, but I had been looking to really increase my Evraz, and you know I had at the time a buy of 575. I think I have a target for Evraz of 700. So when it went down to like 550, I went in quite heavy. I could have been slightly more patient because it ended up going down to like 525. And I did buy some shares at like 530, but I bought about 80% of my shares about 550. So I could have been slightly more patient, but I'm still happy that I got my buy price down to like 560, I think, or 555. So that felt really good. And I'm going to be getting such a massive dividend from Everest now. It's really crazy. So that's awesome. Phoenix here is a closed life insurance specialist. I just think it's having a bit of a pullback. I'm not really sure why. I mean, part of it is the fact it's got a hefty dividend coming up, and that's going to be lovely. But it's still a really great company. It's just digested an incredibly large insurance company as well, so now it's got real firepower. Yeah, this is one of those. I'm pretty sure most Americans have never heard of Phoenix, and most British people watching this won't have either. It's a FTSE 250 company though, and it's kind of like steadily building and becoming a serious player. EPD here. Yeah, I was buying. I really like the yield. I really like the safety of it. I think it's a well-run pipeline business, and because it's an MLP, I don't have to pay any tax on it as a Brit, so that's also a perk for me compared to say KMI or any of the others that escaped me now. Amazon here, I was buying at 32.60 odd. I think anything under 33 for Amazon is a good price. I think it should be in the high threes. So for me, it's like I'm picking up a 15% undervalued company, which in the tech sphere is almost unheard of. So that feels awesome. Additional here is Anto. This was a new position. I have owned Anto before, so when it dipped under like 1400, I felt like I was comfortable enough with the business already and knew enough about it to open up relatively big. No, it's about 1.5% by portfolio value, right? So it's not trivial. Sentiment was very similar actually. I've owned Sentiment beforehand. It went to 97, and I was like, yeah, that's too good to turn down. Again, that's like a 7% yield at that level. Poly likewise, they released some results last week actually that were solid, fairly unremarkable. The only surprise was that they're bringing forward some capital expenditure, which spooked people a little bit. But they're also bringing that forward to take advantage of friendly market as they see it. So I was like, okay. So for me, again, it's just a good chance to buy. And Fevertree here, like I said, I've done videos on them before. I'm quite opinionated on it. It is an expensive stock. You have to really believe that they're going to achieve in at least one of the three areas that is going to be key to their growth. I believe in probably two of them quite heavily. So I'm happy to buy under 23 for Fevertree, which is about where my average is. And I think I'm about even at them at the moment, but it was negative when the month closed. So, yeah, I think I've more or less mentioned everyone else there that's larger. Vistra, Genie, Phoenix, BMY. Yeah, I'm pretty sure. Oh, I guess Legal & General and Aviva, they both published good results. I think it was both of them were last month. Legal & General's especially was stonking. Legal & General really surprised me how well their business is actually running at the moment. It's an incredibly well-run business. It's like a lot of people talk of like Johnson & Johnson being like so well diversified. It's almost like a healthcare REIT. I kind of feel the same. Like Legal & General isn't really just an insurance company. It has like a lot of professional services, an investment company in there. It's like a really well diversified insurance company, and I kind of wish I'd bought more shares when it was a bit cheaper, but I'm still really happy with my price here. It yields solidly as well. Aviva is more of a recovery play, but the new CEO, as of about 18 months ago, is doing a fantastic job. They do have an activist investor that has about 5% of the business, but even the activist investor just wants basically stuff done more aggressively, more quickly, but isn't agitating for a change of CEO or anything, which I think is good. And I'm hoping here that Aviva, whose results were good, but just we're never going to compete with Legal & General's, and everyone with Aviva, including myself, is hoping that now that they've disposed of a lot of their non-core businesses, there might be a special coming back in the not too distant future. There was a share buyback announced, but it was fairly underwhelming, and everyone is sort of waiting to the end of next half year, I think, before we know what goodies we might be getting. But I'm quite happy to own Aviva, and I've actually been picking up a few more shares around 410. So I think that's it's still good value. Probably about 10% undervalued as well, actually, I would say, Aviva. Also, so we'll see with that. But yeah, that's it. That's my portfolio as it stands, and the moves I've been making. Increasingly happy with this, and if anything, like I say, I want to kind of add a few more companies back into it just to diversify in one or two areas, but we'll see. Okay, let's wrap up in just a second. All right, so yeah, that's the end of my portfolio as it stands at the end of August. Like I say, pretty solid month. Really happy with the direction of things. Still made a few big moves. I think the risk of my portfolio, I think it's really well balanced. I'm super happy with it, to be honest. I almost want to crash because I'm pretty sure I'm going to outperform in a crash, but maybe I'm just kidding myself. So let's see when that happens. If anything, I think I want to open up one or two more positions again. I do regret, especially Danaher. I do. So we'll see. But broadly speaking, I mean, it's difficult to not be too happy, even if I'm like nitpicking around the edges, just because so much of the portfolio is running at like all-time highs, right? So, when I first got into investing 10 months ago, my yearly target was 8%, currently running at 12%. So, from that perspective, I'm really delighted with my first year, especially considering I made so many mistakes. And now I'm sort of increasingly confident that I've got the portfolio where I want it to be moving forward. So I guess that's it. Okay, I don't have anything more to add. As ever, any questions, put them below. I'll do my best to reply. Otherwise, I've been the Boss Hog. Thank you very much for watching, and good luck with all your investing. Thanks, everyone.